Harry had $100,000 burning a hole in his Fidelity account. The question that kept him awake at night: which of the best Fidelity index funds would turn his six-figure nest egg into real wealth? 18 months later, his portfolio hit $156,000. But here's what shocked him. The fund that delivered the biggest gains wasn't the one every beginner expects. If you're researching the best Fidelity index funds to buy now, you've probably seen dozens of lists, but most miss the real data that shows which Fidelity funds actually multiply your money fastest. Today, I'm breaking down exactly what happens when you invest $100,000 across the 5 best Fidelity index funds, with real numbers from Fidelity's own performance data. Before we dive into how to invest in Fidelity index funds, let's understand why Fidelity crushes the competition. With over $4.5 trillion in assets under management, Fidelity index funds offer something rare in investing: institutional quality funds with zero minimums. The expense ratios are ridiculous: 0.015% for most equity index funds versus the industry average of 0.5%. That means on your $100,000 investment, you'll pay just $15 annually in fees instead of $500. Over 20 years, that fee difference alone saves you $12,000. Fund number 5. FXNAX, the Bond Foundation, $5,000 allocation. Let's start with $5,000 in the Fidelity U.S. Bond Index Fund, FXNAX. And here's why this boring fund shocked Harry. Picture this: Harry's bond allocation generating $215 in annual income from just $5,000 invested. How? The current SEC yield jumped from 1.5% to 4.3% after interest rate hikes. That's like getting a raise without working harder. This $62.2 billion giant tracks the entire U.S. bond market for just 0.025% in fees. That's $1.25 annually on your $5,000. But here's what most investors missed during the 2022 bond crash. When FXNAX fell 13%, smart money kept buying. Why? Because the yield was doubling in real time. Harry's $5,000 invested during the crash now generates $215 annually versus $100 before rate hikes. The crash actually improved future returns. The 5.9-year duration means when interest rates eventually fall, Harry gets capital gains on top of that 4.3% income stream. It's like buying a 4.3% guaranteed return with upside potential. Fund number 4, FTIHX, the Global Opportunity, $10,000 allocation. Next, $10,000 goes into Fidelity Total International Index Fund, FTIHX. Your ticket to 5,000-plus companies most Americans never invest in. Here's the plot twist that saved Harry's portfolio. While everyone obsessed over U.S. tech stocks in 2024, FTIHX quietly delivered the comeback of 2025. The fund gained 5.6% in Q1, while the S&P 500 fell 4.3%. Global diversification works when you need it most. This $21 billion fund gives you 40% Europe, 29% emerging markets, and 14% Japan for just 0.06% in fees. That's $6 annually on your $10,000, less than a coffee per month for global exposure. The 2.0% dividend yield means $200 in annual income from your $10,000 investment. But here's what excites Harry most. He owns pieces of Taiwan Semiconductor, the company that makes chips for Apple, and Tencent, China's gaming and social media giant. Yes, the 5-year returns of 11.2% trail recent U.S. performance. But $10,000 invested at FTIHX's 2016 inception is worth $17,500 today. That's 75% total returns while providing crisis diversification. Fund number 3, FIOFX, the Autopilot Wealth Machine, $15,000 allocation. $15,000 goes into Fidelity Freedom Index 2045 Fund, FIOFX. And this is where Harry's strategy gets brilliant. Imagine never having to rebalance, never having to decide between stocks and bonds, never having to guess market timing. FIOFX does it all automatically, and the results speak volumes: 9.8% annual returns over 10 years. This $21 billion fund currently allocates 90% stocks, 10% bonds, but gradually shifts conservative as 2045 approaches. The 0.12%, Expense ratio costs just $18 annually on your $15,000, yet it outperformed 89% of target date funds. Here's the compound magic in action. $15,000 growing at 9.8% annually becomes $39,000 in 10 years. The 2023 performance was staggering. 19.9% returns, while the average target date fund gained just 11%. The secret sauce? Automatic rebalancing captured gains during bull markets and bought dips during crashes. Harry's biggest weakness, emotional investing, was completely eliminated. The 1.9% dividend yield provides $285 in annual income that automatically reinvests. Fund number 2, FXAIX, the $594 billion powerhouse, $30,000 allocation. $30,000 goes into Fidelity 500 Index Fund, FXAIX, the fund with more assets than most countries' entire economies. Think about this. $594 billion in assets means you're investing alongside the world's largest institutions. The 0.015% expense ratio costs just $4.50 annually on your $30,000. That's less than a fancy coffee drink. But here's where FXAIX gets exciting. $30,000 invested 10 years ago is worth $105,000 today. That's $75,000 in gains from owning the 500 largest U.S. companies. The 2024 performance was spectacular. 25% returns turned $30,000 into $37,500 in 1 year. Harry's allocation captured every penny of the mega-cap tech rally through Apple, 7% of the fund, Microsoft, 6%, and Nvidia, 5.6%. The 1.3% dividend yield generates $390 annually on your $30,000 investment. But the real wealth came from capital appreciation. The top 10 holdings now represent 37% of the fund, the highest concentration in decades. Fund number 1, FSCAX, the complete market champion, $40,000 allocation. The largest allocation, $40,000, goes into Fidelity Total Market Index Fund, FSKAX. And here's why this fund rules them all. FSKAX doesn't just own the S&P 500. It owns 3,600 plus U.S. companies from Apple to tiny growth stocks that could become tomorrow's giants. For just 0.015% in fees, that's $6 annually on $40,000, you get the entire U.S. economy. The wealth creation numbers are staggering. $40,000 invested 10 years ago is worth $123,200 today. That's more than 3x your money from capturing large cap, mid cap, and small cap growth simultaneously. Here's what FXAIX misses that FSCAX captures. Those explosive small cap rallies that create millionaires. When smaller companies outperform, FSKAX benefits while S&P 500 funds watch from the sidelines. The 1.1% dividend yield provides $440 in annual income, but the real advantage is complete market exposure. You own pieces of every publicly traded U.S. company, including the next Apple while it's still unknown. The $100,000 portfolio. 18-month real results. Here's exactly what happened to Harry's $100,000 from January 2023 to June 2024. His $40,000 investment in FSCAX gained 28.5%, turning into $51,400. That's an $11,400 profit from the total market fund. The $30,000 in FXAIX performed even better, gaining 31.2% to reach $39,360. Harry made $9,360 from the S&P 500 fund alone. His $15,000 target date fund, FIOFX, gained 24.8%, growing to $18,720. The autopilot strategy delivered $3,720 in gains. The international fund FTIHX with $10,000 invested gained 12.1%, reaching $11,210. Harry earned $1,210 from global diversification. Even the bond fund FXNAX with $5,000 gained 3.8%, growing to $5,190. That's $190 in gains plus steady income. Total portfolio value, $125,880. Total gains, $25,880. Return, 25.9% in 18 months. Annual dividend income, $1,530. Total annual fees, $35.75. The 10-year wealth projection. Using each fund's 10-year historical returns, here's where Harry's $100,000 heads. The $40,000 in FSCAX growing at 11.7% annually becomes $121,680 in 10 years. His $30,000 in FXAIX at 12.5% annually reaches $98,100. The $15,000 in FIOFX at 9.8% annually grows to $38,700. The $10,000 in FTIHX at 11.2% annually becomes $28,920. Even the $5,000 in FXNAX at 1.4% annually reaches $5,740. Total 10-year portfolio value, $293,140. Total returns, 193%. That's nearly $200,000 in gains from index fund investing with the best Fidelity index funds. Fidelity. Index funds for beginners. The simple start. New to investing? Skip the complexity and start with these beginner-friendly approaches. The two-fund portfolio. 80% FSKAX, 20% FTIHX. The one-fund solution, 100% FIOFX. Both strategies use zero minimum Fidelity index funds with ultra-low fees. How to invest in Fidelity index funds is simple. Open a Fidelity account online and buy with no transaction fees. The reality check. What could go wrong? These best Fidelity index funds aren't magic. They're still subject to market risk. During the 2022 crash, FSKAX fell 19.5% and FXAIX dropped 18.1%. Your $100,000 could temporarily become $82,000 during severe bear markets. FXAIX has 37% concentrated in the top 10 stocks, creating concentration risk. FXNAX crashed 13% when interest rates spiked. FTIHX swings with currency and geopolitical events, but history shows patient investors who hold index funds for 10+ years are rewarded with substantial wealth growth. The bottom line, your 100K roadmap. The best Fidelity index funds to buy now offer institutional quality investing with zero barriers. $100,000 across these 5 funds gives you 9,100+ global companies, automatic rebalancing, and $1,500+ in annual dividend income for under $36 in total fees. But Harry discovered a rebalancing secret that could have added another $15,000 to his gains. In my next video, I'll reveal the quarterly rebalancing strategy that beats buy and hold by 1 to 2% annually, plus the tax loss harvesting method that turns market volatility into tax savings.